Hi, this is Ron Yarbrough with Bank of Kansas City. I am trying to introduce a video training series to see if that will help better prepare people to buy a home or get mortgage financing if it's their second or third or fourth home. Things haven't really changed that much in the mortgage industry, except we just now need to be a little bit more prepared up front so that we don't have any issues along the way in buying a home. The biggest changes have been just for first-time home buyers, so that you know exactly what it is you need to do to prepare in advance before looking at homes and making a purchase. So the first video is going to be basically about preparing for a mortgage. The first step that you need to do to prepare for a mortgage is you need to start with your monthly budget. If you're a first-time home buyer, this is a very, very important step. Preparing a budget is something that will take you a little bit of time to a lot of time, just depending on what you actually know of your current expense situation and some of the things that you need to plan for in the future. I recommend there's several different websites available today that are free to consumers to go out and use those tools. Make sure you read all the privacy issues concerning those tools that are available. But several of them are mint.com, mint.com, powerwallet.com, creditkarma.com, and budgetsimple.com, just to name a few. There are a lot of availability for all kinds of budgeting tools now. Make sure that you put into your budget some monthly savings, because once you become a homeowner, you won't be able to pick up the phone and call somebody to come fix your toilet or your water heater or your air conditioner or anything that happens to break in your home. You have to be prepared to do that yourself. If you are not prepared with an emergency fund or something of that nature, then you will have to tap into additional credit and finance any of those major important things that need to be fixed immediately. Now, with the second step that you need to do when you're looking to get prepared for a mortgage is I suggest you get with a mortgage planner, which is something that I do. And there are other mortgage planners available in the area. You can look for them through Google searches and whatnot. But what you want to do is you want to find somebody that will work with you over a period of time to help you plan for the correct mortgage, and also have a full resource of experts to help you along the way, such as financial planners, CPAs, basic accountants, different insurance agents, different industry professionals to help you before you buy the home, after you buy the home, and then also help you for the future. So I suggest that you get with a mortgage planner. A mortgage planner will help you identify what is the best program for you financially in purchasing a home, whether that be a 3.5% down FHA mortgage, a 5% down conventional mortgage, if you need a special community product for your first mortgage for down payment assistance, whether you need a gift, how it is that you are going to actually buy the home, and to structure that mortgage in the best financial way, instead of just trying to meet your needs of getting a mortgage right now to buy a home and then considering other things later. A planner will consider all aspects of your financial plan, the short term and long term. One thing you need to look at is, buying the home, you know how to fit that into your budget because you're working on your budgeting tools. So what extra do you have in your budget? What extra do you need to have in your budget for college expenses? Do you need a new car in the next 2 or 3 years? Do you need to start planning for retirement at some point? Where are you at in your overall financial goals? So the mortgage planner is going to help you identify those and help you reach those goals. There's a lot of major purchases that happen throughout life. A lot of them can be planned. A lot of them can't be planned. So it's very important that we have an emergency fund. I recommend that any home buyer, regardless if it's your first time, second time, or whatever, you need to have non-retirement reserve assets, liquid assets that you can access in case of emergency. I recommend a minimum of those assets in savings or like type investment tools to be at least 6 months of your household salary. For instance, if you have combined with a husband and wife of $80,000 a year in income, then you really need to try to define $40,000 of income in that reserve account. You don't need to have that to qualify for a mortgage, but that needs to be a goal that is top of mind when you go to buy a mortgage, because life happens every day, and you need to be prepared for those unexpected expenses. Some of the questions you need to answer for yourself before you actually go out and get a mortgage is, do you have a financial planner? If you do have a financial planner, do you meet with this financial planner on a semi-annual basis, on an annual basis? Are you putting most all of your retirement funds just into a 401k, which is fine, but you'll have to pay a penalty if you access those funds. And it takes a long time to build up those retirement funds, so you don't want to just access them and deplete them, because then you have to go back to the beginning and start putting money back into it. So these are some of the things that you need to identify when you actually get prepared for a mortgage. Once again, I suggest you go to a budgeting tool. It could be Mint.com, Credit Karma with a K.com, PowerWallet.com, BudgetSimple.com. Any of those will really help you identify where you're at financially and how to track your budget in the short term. This process doesn't have to be a long process. It could be a 30-day process or 60-day or 90 or 6 months or a year. But the proper planning is essential before you go out and you buy a new home. So this is the first of my installment series. I will come back with additional in-depth discussions on credit itself, on debt to income, on all the other aspects in a home mortgage when you're deciding to go forward. Talk to you later. Thanks. Bye.